Hello and welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Peter Krauth, the author of the Great Silver Bull, newsletter publisher, silver stock investor, and silver advisor. Peter, welcome to the show. How are you?
Robert, thanks for having me. I'm well, and I'm looking forward to our chat today.
Likewise, always plenty to talk about, certainly a lot to talk about in this industry at the moment. And I thought I'd start by asking you why you think or why you believe that silver, specifically silver, at the moment is so crucial right now in comparison to gold and possibly other commodities.
So, I mean, it for me, if I had to sort of pick one single thing, it would have to be value. And I believe that silver is very much undervalued against practically any other commodity or even asset, period. Um, it's the only metal that is still well below its 1980 high, which is pretty impressive when you think. We've certainly been climbing pretty steadily over the last, I'm going to say, especially the last year and a half. But we're currently around 37, $38. $50 was the all-time high that was hit both in January of 1980 and then again in April of 2011. And we're steadily climbing, I believe, back towards that. Tremendous built-in value if you just look on a likely return to that level, and then to likely go well beyond that, which is I think what's in the cards, in fact, for silver.
Well, I'm glad you pointed back to that 1980 level because I still think for a lot of people that are listening to this that might be new to the industry or new to thinking about silver, it's a very important thing to make them aware of is actually that the all-time high is still we're kind of near it, but it's still a 30% or 20% gain from where we are at the moment. So thanks for bringing that to people's attention. I know that there's a lot of different macroeconomic factors that look to be driving silver, and there's a lot of monetary demands and also a lot of industrial demands. So again, from your experience in this industry, what do you think are the really key factors at the moment driving silver forwards?
So, silver has become, over the last 10 years or so, increasingly an industrially used metal as opposed to being, if you consider its monetary demand or applications. Uh, it's still roughly, I'm going to say very roughly 50-50, but that seems to have shifted over the last 10 years or so to closer to about 60-40. Now, of course, if investor demand comes in a big way for silver as money, to own silver as an investment, it's silver itself as an investment, then this can shift pretty quickly. But right now we're roughly at about 60-40, 60 industrial, 40 investment demand. And that's, I'm going to say, in most part, and because of the real flow into things like solar panels. That has been what I call the 800-pound gorilla in the silver space. So, right now, it's incredible. Solar alone accounts for 20% of all mined silver demand. So just to give some perspectives to your viewers, the silver market is roughly 1 billion ounces a year. Um, about 85% of that is supplied from mining, and about 15% comes from recycling. And of the mined supply, which is the bulk, the lion's share of silver that comes to market every year, about 20% of that goes to solar panels alone. So it is just a dominant demand source in the silver space. We've seen that, I think, nearly double or triple in the last 10 years in terms of the amount of silver that consumes. I think that's going to continue. You get all sorts of, research and reports where that kind of seems to ebb and flow. But the Silver Institute is one of the bigger research houses that give you perspective on the demand and supply sources. And they had forecast that this year things would slow down a little bit. You'd have some growth, but you'd have a smaller deficit, which we can talk about in a moment. But they thought that the demand from silver for silver from solar would perhaps grow more quietly, let's say. And I think that's going to be wrong. I mean, I looked at just recently some numbers coming out of China, which is the by far the largest consumer of solar panels, installer of solar panels, producer of solar panels. And because of some stimulus that the government has brought forward, the installation of solar panels has been well beyond forecasts. So again, I think that we tend to underestimate, and the market tends to surprise based on those research estimates. So that's a really big one. Solar is huge. Electronics has also been very big. You know, silver is after oil is the next most used metal in terms of most used commodity in terms of applications. So after oil, silver is number two. Of course, you know, we consume a lot less silver than we do oil because of oil going into energy and so on. That's obviously starting to change somewhat, but um, there is practically every week or so some new silver patent that's being filed because we're finding different ways. I like to call it a wonder metal, and it really is at the same time what I would call a hybrid metal. It's the only metal that is truly both, highly applicable industrially because it's the most reflective, it's the most conductive in terms of electricity and of heat of all metals. And yet it's been money for thousands of years, even well beyond, for about 5,000 years. So beyond what gold has been used for as money. So it is truly a wonder metal, and I believe all of these things will drive silver much higher going forward.
Well, there are 2 points to make there. Number one would be I always reference going back into history that 300 or 400 years ago, obviously people would not have known the scientific benefits and industrial uses of silver. So that's a big difference between looking back in time and nowadays. And the second point on that is that just puts, as you say, silver in such a unique position. And even if there are advances in technology, i.e., let's just say solar panels become even more efficient and they start using less silver, I personally believe that that demand is going to offset anyway. So the same trajectory is going to be there. And I mentioned at the start you wrote a book called The Great Silver Ball. I will link to that in the post that comes with this as well. So if you can, where are we in the silver bull market and what's left to come? What can we expect moving forward?
So great question. I mean, if you look at commodities, secular commodities bull markets globally and over a long enough time period, they tend to run typically anywhere from maybe 15 years to as much as 25 or even 30 years. And so these are secular bull markets. Some, as I say, can be a bit shorter, some can be a bit longer. I think that we started this secular bull market, in my view, back in about 2001 when silver was trading somewhere around $4. And we're currently almost 10 times that. So for some perspectives, gold was trading at that time at about $250 US, and we're now at about 33.50. So gold has already had a bigger multiple return. What we do know, though, is that out of, I think it's the last 7 or 8 precious metals bull markets, silver has outperformed gold in 7 out of 9 of those previous bull markets. Some of them have been shorter term markets. Not all of them were secular bull markets, but so you can define them different ways. But silver has outperformed gold almost each and every time. Much of that outperformance comes later in the bull market. And that's one of the reasons I think that there's a lot of gain still built in and that we're going to see as this bull market matures. But what's interesting, and I like to reference, there's a famous investor by the name Jim Rogers who wrote several books on commodities investing and highly successful. He was a business partner running a fund along with George Soros back in the 70s. And I think had something like an over 4,000% return in the fund during the 10 or 15-year run. And so he's a very, very smart guy. And he believes that the typical commodities bull market tends to have, over its lifespan, about halfway through, you get this big correction. And this correction can typically bring that commodity or asset down by about half. We saw that I guess the most obvious one or easiest one to point to, and it very much relates to silver, but is the gold bull market that I believe we're also in, which started around the same time, say about 2001. So gold ran from about $250 in 2001 to $1,900 in 2011. This would have been in the fall of 2011. And then over the next couple of years, it proceeded to correct significantly. And I believe it was in December of 2015, bottomed out at $1,050. So it was nearly cut in half. And that is, according to Jim Rogers, an almost textbook type of correction within a secular bull market.
Mhm.
And you can measure these things different ways, but I believe that that was sort of the ultimate bottom. It is at least on a dollar sense, price sense for gold. It was the ultimate bottom in that that halfways through the secular bull correction. And I think that silver has essentially mostly followed that. I think that that basically marks the bottom. I mean, you can look at COVID and have look at these big corrections, but they were very temporary. And so I kind of, when a correction is a spike down or a spike up, I
Mhm.
typically tend to maybe, overlook it because I feel it's less meaningful. But I think that around that time range, say anywhere from about 2015 to about 2017 or so, 2018, we were in that the bottom of that correction phase. And since then, we are in the second half of the secular bull market. And as I say, in silver in particular, it tends to outperform gold. So I've been saying since about 2009, so 14, 15 years already, that I think that we're going to see gold ultimately top out. At the time, I had been saying 5,000. I now feel that that's too low because I was told, when gold was maybe $700 or $800, and I thought it would go to at least 2,000. I was told, oh my God, that's just crazy. Those are crazy numbers. You don't want to live in that world. And well, here we are at 3,300. And you've got the large investment banks calling for 4,000, $5,000 gold. So I think that's too conservative now. I think gold's going probably closer to somewhere around 10,000. And it's all a question of context. But with that in mind, I think silver is going to dramatically outperform. And I think $50 is only a matter of time. It's in my view essentially a given that it will take out its all-time high, and that will be all-time new territory for the metal. Interestingly enough, I mean, I'm not an expert in technical analysis, but I do follow some whom I believe are very, very well versed and successful in following technical analysis. And they're calling silver one of perhaps two of modern times biggest technical price breakout setups ever.
Mhm.
So that would be just tremendous for silver, and silver reaching $50 and holding it and then eventually moving higher from it will put it in uncharted waters. And many who are very good at following some of this say, we could quickly, easily get to perhaps 70 or 80. My personal target, which I talk about in the book, is actually $300 in silver. I'm not saying it's going to go there and stay there, but who knows? What I am saying is that if and I didn't get the $300 to be sensational. What I did was, and this is all in the book,
Mhm.
I talk about different indicators and how they point me, and I go through the details of how they point me to a target of 300. And it's based on things like the gold silver ratio. When silver peaked in 1980, the let's say average US home price to silver ratio back in
Mhm.
1980 and where that would point us, the Dow to silver ratio, the inflation adjusted prices for silver, all of these different things, I think very realistically point to potentially as high as $300 in silver. I think it could go there. I'm not saying it will stay there, but I think in a mania phase, it's um, not unrealistic at all.
I do think triple digit silver is highly plausible. So again, thank you for adding a bit of meat on the bone, so to speak, to that. And again, I'll
Mhm.
link to the book. I highly recommend people do go and read it because you do lay out all the analysis very carefully. So as you say, it's not to be sensational. This is a
Right.
what I would class as a clear path actually to $300 silver. Peter, that being said, and I appreciate we've mentioned solar, we've mentioned various uses that silver has, but do you think that there's going to be a particular catalyst or two within the next year or two that could see silver make a sharp move, or is it everything that we've already discussed?
So something interesting, which I alluded to earlier, is about the supply demand picture, and it's quite shocking actually if you look into it, and it doesn't take much research, but so the Silver Institute publishes their numbers every year, and they lay out what supply is, they lay out what demand is, and for the last 4 years running, this year, and I believe they'll be correct. I think they've actually underestimated, but that there will be a fifth consecutive year of supply deficit. And what they're basically saying is, if you look at what comes from the two main sources, being mining and recycling, so that's about 1 billion ounces. Demand is well beyond that. Like the last few years, we were about 20% beyond supply in terms of demand. So you have to ask yourself, where is this silver coming from? Because you can't just operate in a deficit, especially on an ongoing basis. So last year, I started digging into this pretty in a pretty detailed way, and saw that over time, in the past, say, decade or so, a bit more, we've been on balance accumulating excess silver. So there'd be this mine and recycling supply. Industry and investment were consuming less than what was being produced. So this excess silver was going into inventory. Now, there are two main types of inventory. Some of it is what we can easily measure and define, and it's on the futures exchanges. So in New York, the COMEX, in London, the LBMA, and the three big ones are those two plus Shanghai in China. And we're looking at a few billion ounces, perhaps 3 billion ounces of these inventories. And then beyond that, you've got privately held silver, which at sufficiently high prices is likely to come back to market and help
Hmm.
provide, supply to meet demand. But what's interesting is these 2 to 3 billion ounces, starting about the early part of 2021, started to be drawn down. So my, I guess, conclusion was that the big demand for silver, which was mostly industrial, and this is steady demand, which doesn't have an option. Silver is, that's an interesting aspect, really, is that silver is indispensable and irreplaceable in many of its applications.
Hmm.
So these big consumers industrially for silver had no choice. They had to get their silver. And luckily enough for them, there were these large above ground, what I call secondary supplies, inventories that they were able to go and tap into. And basically, because it's already sitting there, it's already been produced, it didn't put pressure on bringing new supply to market. So it didn't put upward price pressure on the silver price. They were able to go buy into these stockpiles and gradually draw them down. Well, at this point, over the last 4 years, they're down about 70 or 75% already. And I think that's the big catalyst is that and it was a fantastic, thorough report that actually came out probably about a month after I started talking about this from TD Securities that had the same conclusion. They said, these secondary supplies are being drawn down. Once that's essentially squeezed low enough, it doesn't have to be zero. It could still be perhaps 10% or 5% of where they peaked at. That's enough because the supply is tight enough, and then you have a squeeze. So basically, at that point, you have the market waking up sufficiently and saying, "Oh boy, we're essentially out of silver in terms of being able to meet our full demand." Supply, by the way, and that's another interesting point, mine supply is not growing. It's nearly flat and has been for, it peaked actually 10 years ago. So at about 900 million ounces, and we're somewhere around 820 or 850 million ounces of mine supply coming every year. It's also fair to say that, with these now more elevated silver prices, more projects become economic. So there's a possibility that we'll see that slowly grow in terms of what we can get out of mining silver every year. But even the Silver Institute themselves said that last year that they expected that these deficits would go on probably for at least another 5 years. And that, in other words, there was no way mine plus recycling would actually catch up to demand, and that we would very likely hit new record deficits once again within the next 5 years. So it's a very bleak picture in terms of supply being able to meet demand, but it's a very encouraging and exciting and positive picture for investors when it comes to silver and different ways to invest in silver.
Well, it's simple economics 101, as I like to call it. If you've got a structural deficit in something and that's going to continue, then at some point that price point has to correct itself. And ultimately, from everything you've just said, I think that's going to be a price that's significantly higher from where we are today.
Absolutely. One last point, if I may, Robert, is that what's interesting and what's maybe different. So a couple of points that are related about silver. In some ways, silver does not follow, or the silver price does not follow economics or economics 101 for a few reasons. One, well, the main reason is that silver so what we call deposits, metals deposits, found anywhere in the Earth's crust are very particular. For silver specifically, it's very rare to find a deposit that's just silver.
Mhm.
It's almost always associated with other metals, and that's true of other metals as well. But silver in particular is hard to find by itself. So many times, in fact, only about 25% of mined silver comes from what we would call primary silver mines, where the main metal is silver. The other 75% of silver comes from mines where silver is actually less important and is more of a byproduct metal. So those would be mines of gold, of copper, of lead, or zinc. And so think about that. Only so as much as 75% of all of the silver that comes from mines is really silver that's not that important to that miner because it's a byproduct. So here's where it gets interesting. If the price of silver moves up significantly, I mean, and it has, but let's say it keeps going to 50 or beyond, and the market gets really excited, and the demand goes up in terms of investment, for example. Um, the miners of the silver. So if you think 75% of that silver is from mines that's not mainly silver, those miners are happy to accept $50 for every ounce that they produce. But because silver is not that important to their revenue stream, and it's hard to ramp up a mine to begin with, they will essentially just accept the higher price and not even perhaps try to produce more silver. They'll just accept the higher price and say, thank you very much for paying me more for my silver. And I'm still going to only bring to market whatever I was bringing to market last year or whatever I was already planning to bring to market. So it can exacerbate even higher prices because, it kind of feeds on itself. So it's what I would call that the silver supply is inelastic to price. In
Mhm.
other words, higher price does not bring more supply necessarily to market. And it can if where the supply is from what we were talking about earlier. Privately held silver, the price is high enough, you could get dishoarding. So people who own silver privately will say, "Oh, this is a high enough price. I'm prepared to sell some of my physical silver back into the market." And so the argument has always been, well, there's always enough silver around, and that silver will help to meet supply. And my argument is that yes, except it's likely to only come back to market at considerably higher prices. And I don't think what we've seen so far anyways is that $30, $35. I don't think $40 is even going to be enough to bring that much silver to market. It's going to have to be considerably higher before these private silver owners will be willing to part with their silver.
And that's why the price points of, let's just say 50, 75, 100, for example, they're also key prices to watch because there's a psychological barrier there, isn't there? Someone sees $50 silver and they go, I'm unloading the truck, I'm selling. But as you say, with everything you've just said, I think a lot higher is going to be the answer moving forward.
Exactly, exactly.
But Peter, I'm aware that we're a bit short for time today, so I just want to lead on with this final question, if I may. And I will go into more depth with Ted Butler about this in the next podcast episode. I'd be remiss if I didn't ask you about mining stocks and mining results. Obviously, I'm not an investment advisor. Please don't take any of this as investment advice. A lot of the results have been very, very good so far from quarter two. Is there anything in particular, either any companies that stand out for you, or if not, been the overarching theme from these results thus far?
Well, I think that what I talked about that a little bit earlier, and that is that the market's starting to realize that, and even some of the some of the mining CEOs themselves are pretty jaded after. This is a tough business, right? Mining is a very tough business. Exploration is even tougher. It requires a lot of capital, and it's risky. And it I think that the producers, if we want to maybe look at that aspect of it, the silver producers, um, after they go through a few cycles and they get punished or blamed, let's say by investors who say, you've misspent the capital and you overpaid when you made acquisitions, that kind of thing, they pull in their horns and they become more conservative. But eventually, as they perhaps are some of the last ones to concede and say, yes, we are now finally in a silver bull market, and accept and believe that not only are these new higher prices going to be sustained, but they're going to continue to move higher. And so they start to be more willing to invest capital, to raise capital, to build out projects. It's also true that that at these higher prices, assuming they're sustained, will also make projects more economic. And so, the space just becomes more attractive. And of course, at higher prices, even if you're not necessarily growing your existing projects, most of these new higher prices just go straight to the bottom line. So, a higher silver price, assuming most of your costs stay the same, makes you significantly and very quickly a lot more profitable. And I think that's what the at least the larger investors are starting to slowly see. When you look at some of the silver and gold ETFs like SIL or GDX, um, they have absolutely jumped in the last several months. And I think that's where you're seeing the larger investors, and it goes down the chain to sort of, the more sophisticated investors, and then the regular retail investors are starting to realize that, wow, this is really quite the profitable business. And if the outlook for these metals remains, that their commodities prices are going to stay high and continue climbing, then these businesses are going to keep printing money and just keep getting more and more profitable. And so their share prices get bid up. And we've seen these huge gap ups, frankly, if you just look at the last maybe 6 months. So I believe the last big cycle took off would have been late February of last year. And we've seen huge gains in many of these names. And then we've seen another big run up in the last, say, 6 months again this year or so. but the potential remains tremendous because so many of these have been beaten down for so long. I think that there's tremendous value. People, I recommend that people slowly get their feet wet in something like this. Don't jump in with a huge investment right away. There's a lot of upside left. I think, as I said earlier, we're only maybe about halfway through this secular bull. The second half promises to be very profitable. So, do some research, start looking at perhaps different newsletters, read a book, go online. Don't jump into anything with both feet necessarily. That's something important to know about silver in particular. I think one of the bigger mistakes that people make is they perhaps either go in too heavily or stay away perhaps completely because it's very volatile. It's more volatile perhaps even than gold. And then the smaller the company, the more volatile yet, because exploration can go through big swings and has certain different drivers. But I think that one of the bigger mistakes is that, and then the other mistake is avoiding it perhaps completely,
Mhm.
as I said, because I think that in some capacity, silver has a role in every investor's portfolio, whether that be as conservative as possible and just having exposure to some physical silver, all the way up to, exposure to some of the silver exploration plays that are, of course, the most risky and the most volatile. My answer to that, and I talk about that in the book, is it's a question of exposure. You have to know yourself. You have to know how much risk you're willing to take on, how much of your portfolio you're willing to put at risk. And there are different ways, which also I talk about in the book, how you can mitigate that risk. You can buy into a position slowly in tranches. You can take profits if your stock doubled for you, which we've done actually multiple times this year in the newsletter, where things have performed very well. So that's what I would say really as a kind of a takeaway is don't be afraid of the sector. Make that volatility work for you and know your risk tolerance and gain exposure gradually to the space by taking bites. Don't take a whole mouthful, take small bites and gain that exposure and grow your comfort level with the names and the different investments that you make.
Well, Peter, I think that's a fantastic place to wrap up. And as mentioned uh, times already, I'll put links to everything in the show notes. But I do highly recommend people go and check out and then also buy the Great Silver Ball on Amazon. I'll put a link to that in. Also, the website as well, thegreatsilverball.com. I'll put a link to your LinkedIn profile as well. You're a very good follow over on LinkedIn. That's Peter Krauth. That's Krauth. Peter, I look forward to having another chat in 2026. It's a very exciting industry to be in. And again, a massive thank you for your time this morning.
Well, thank you, Robert. Thanks for the work that you do, and it's been my pleasure to be here with you today and share some ideas and thoughts.